All right. Back in the action tonight. Boy, that weekend just flies right by, doesn't it? That's all right, though. Back to work here. Got a big week ahead of us. Want to make sure we are all ready for the action here this second week of the month. It is Monday evening, after all. It's August the 10th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me, because my job tonight is to help us find the best entry setups for tomorrow. That's Tuesday's trading session, and I got a jam-packed video in store for you guys and gals tonight. The charts are already in the background. As you can see, we got the S&P, of course. We got the oil, and we got the yellow metal. We got gold on our radar for tomorrow. Boy, lots of stuff to talk about on these charts tonight. I also want to grab the calendar for this week. Got some big news later on this week, and I want to make sure you guys know when to be at your desks and paying attention here this second week of the month of August. So charts are ready. Calendar is ready. Glad you are ready right along with us. Before we jump in, though, and get our hands dirty tonight on these setups for tomorrow, I just want to make sure to remind you to make sure you subscribe to this YouTube channel. If you haven't done so already, hit that big red button, subscribe, and make sure you follow along every evening on this nightly newsletter. Also, don't forget, if you have any questions for me, I love to answer all the trading questions, so drop those questions in the comment section below. And as always, I appreciate you guys tuning in every evening. If you're like me and you use this video to get your mind right and get those charts right for tomorrow, hit that thumbs up button for me, guys. Thank you so much for supporting this channel by subscribing, dropping those questions in, and thumbs up if you guys like the video here for tonight. But speaking of the video, let's cut to the chase here, shall we? Let's check the calendar. Let's kick off the video tonight, kick off a brand new week here. Let's grab the calendar, courtesy of our friends at econoday.com. Let's take a look at what we have here on our news calendar. Of course, tomorrow's Tuesday. Before we jump in, though, and look at the news tomorrow, be aware, though, this is the second week of the month, right? Second week of the month is kind of notorious for being a little bit of a slower news week, right? So, historically speaking, just so you know, the first week, the third week, and of course the last week of the month, right? The first and the last weeks of the month are always the busiest, right? The second and third week, the third week is OPEX week. That's very busy. So this second week is always, it's just kind of known as being a relatively, not dull, but low news week. Usually there aren't a lot of news events that we see here this week. This week, though, pretty impressive. We got PPI, we got some CPI, some jobs, right? Some retail sales, not to mention whatever we lack in news this week. Where do we start, right? So last week, where we left off last week, the negotiations basically broke down right into last Friday. There was no stimulus deal that was agreed by everybody here in the U.S. So, of course, that leaves this weekend, right? This weekend, U.S. President Trump comes out, issues an executive order on Saturday, right? Which, of course, we're all waiting until Monday morning, right? Got my popcorn in hand this morning going, oh, baby, how is the market going to react? So far, so good. It looks like the market seems to like what they heard. Gold continues its bearish move lower. Oil, of course, is still pushing higher, and the S&P's pushing higher. NASDAQ, of course, continues to be a bit of a lagger right now because of the tech stuff going on with that. But for the most part, though, it seems like even though those stimulus talks broke down last week, it does seem like the markets they're okay. But, remember, as this gets later on in this month of August, people are going to start to get more nervous. The consumer sentiment will start to get more nervous. Will we hear more about this next stimulus package? Will they come back together this week and get the deal done? It feels like we're right back at the end of last year, doesn't it? It feels like we're right back to the same time last year, and it was the U.S. and China, right? Now it's the side of the aisle here in the U.S., right? So it's unfortunate, but we got to be aware that that's going to be kind of the big known unknown coming out this week, right? So will we hear more about a stimulus deal? Will it all break down? Will they find something, right, to come to common ground on? That is definitely something that I think everybody is waiting on right now. We had the executive order, right? A lot of people being very critical of that, saying it's not going to be enough, right, to really kind of juice this thing into the end of the year. The market markets are going to tell us this in the next couple days here. So we're definitely listening in. We also have that it sounds like it sounds like we're going to hear some from airlines this week too. It sounds like there's some sort of deal in the mix right now for not a bailout. They're not calling it a bailout. They're calling it a rescue package, right, for the airlines. Because, of course, airline traffic is down like 85%, right, year over year right now. So airlines, obviously big names, right, on the S&P 500, right, big names across the equity markets, big for oil, as you can imagine, right? So that's going to be something on our radar this week. So, those, in my opinion, are the two big known unknowns we go into this week here. Will we hear about a rescue plan for the airlines? Think oil, think E-minis, right? Obviously for futures, if you're a single stock trader, right? You know those names as well. And will we hear more about stimulus? What will the market continue to do with this? Those are big known unknowns. And then as we go into tomorrow, the big news for tomorrow is quite obviously that PPI number at 8:30 Eastern time. Anytime I see PPI, CPI, any of these I's, indexes on the end, I always think gold. I always think dollar. I always think currencies. So that's definitely something we're watching tomorrow morning at 8:30 Eastern time. Now, I will be honest, it's not the biggest news of the week. It is bigger news later on. The CPI report on Wednesday is a very big, important news number. Jobs on Thursday won't be that bad, but I would imagine the bigger number would be that retail sales on Friday. So the big juicy news reports this week are the CPI report and that retail sales number. But tomorrow, though, we got a nice tasty number coming out at 8:30 Eastern time. Now, we will have a front row seat tomorrow morning in our trade room every morning, Monday through Friday, 8 o'clock Eastern time. I'm going to put the charts together tonight, and tomorrow we're going to rock those charts together, right? We'll execute the plan together tomorrow in the trade room. We open up at 8 o'clock Eastern time, Monday through Friday. I would love to have you there right there with me. You can register as a brand new client and join the trade room. I'll put the links for you guys right below this video on the blog, a big button below it, or a link in the description of this YouTube channel, right? So grab that link in the video description, grab that big button below the video tonight on the trading blog, and get registered. That way you're with me tomorrow morning at the opening bell. So 8:30 Eastern time for tomorrow. Will we hear more about stimulus? Will we hear more about this rescue package from for the airlines? Those are some of the big known unknowns going on, and we get a busy week because of it, right? Second week, quiet? I don't think so. We have potential for a lot of big fireworks here this week. All right, charts are all ready, as you can see. We got some E-minis. We got the oil. We got the gold. Gold is looking like a really important rotation clue. We'll talk about rotation on gold here tonight. Oil is a beautiful spike and triangle. Love the chart on oil. Should be pretty easy pickings tomorrow. Again, we got that rescue package coming for the airlines. Hopefully that doesn't literally stall things out for tomorrow. That was a bad joke. And then, of course, the S&P here. S&P, we're going to start tonight, right, on this video, because the S&P is, well, I'll tell you, we've seen a lot of these lately where we've got two main chart patterns that are both pretty much lined up telling us the exact same thing right now. So on the E-mini, what do we got going on right now on the E-mini? If someone was to ask me what happened today on the E-mini S&P, I would say the market was bullish at the open into a trading range. We had a hell of a ride lower. I'm not sure what spooked the market at that point. And of course, a V bottom run right back up. Now, I'll tell you right now, whenever I see a V bottom like that off of the low, if you weren't getting in on those failures going higher here, you're not in this move right now. The first thing I notice when I look at this chart is there are going to be a lot of buyers who were not able to really stomach that drop like that, right? And they're waiting to get long somewhere down here. I would imagine any deep pullback right now will be seen as a buying opportunity. That's one thing that comes to mind right away when I see that range and that V bottom. But, take away the V bottom. It's a range. And what do we do with a range? What is a range? A range is a balanced area, right? A range is a magnet. What goes down will come back up most likely. What goes up will come back down, right? Now, it's a bull bias to this. So definitely want to be buying underneath the range rather than trying to sell above it, right? Because it's bullish. So we'll look to be a buyer underneath that trading range. And remind me, what is the best entry pattern or entry setup when we have a range market? It's a breakout failure. We wait for price to break out. We wait for the pullback to try. Once it fails, we buy back up into that range. So the first thing I see in this chart is it's a bull market into a range, buy underneath the range using failure patterns. Then you look at it even closer and you say, well, actually, there's even more important clues than that, because the way that they made that V bottom and then right back up again, again, if you're trading those nested failures, you're already good to go. But I can almost guarantee you a lot of buyers got really spooked by that, especially after the stimulus talks broke down, the executive order over the weekend. I bet there was a lot of buyers looking back on this going, man, just give me one more shot down here. I won't miss it that time. You know what I mean? I would imagine that's going through a lot of people's heads right now that missed, long-term traders, right? People trying to hold this thing back to those all-time highs, which by the way are right there, right? 33.75 and a quarter, just a little knock below that pendulum swing. Now the pendulum swing, you can see here, I've measured the amount below the range and then I projected that above the range. That really is kind of the big target right now for those buyers. But let's face it, if they make it all the way to 33.70 tomorrow, they're going to probably get that 75 done, right? Cash that paycheck, and we'll probably see some pretty good, right, profit taking like we saw on the NASDAQ earlier on this summer. So that's the range, right? The range tells me look to be a buyer with a failure pattern, and don't be surprised if this market runs up to that 33.70 and 3/4, because again, it's a bull bias to it. So we're thinking failures and we're thinking breakout patterns, right? We talk about 2 breakout patterns we like to use. We talked about those last week, right? We'll talk about those in more detail here in a moment. There's one more big clue though, and that is this spike up, and that is into this channel. Now, we talk a lot about spiking channels here on this video newsletter because spiking channels are really, in my opinion, they're one of the top 5 chart patterns you really have to learn if you're a new trader. And the one thing we know about spiking channels is they start off with a spike and they shallow pullback, shallow pullback, shallow pullback. Now, notice what's not happening. Deep pullback, right? No deep pullback. So when I see a real strong spike like that, and a shallow pullback, shallow pullback, shallow pullback, all of the conservative, 60 to 70% pullback traders, they're all sitting here going, hey, what about me? Come back to get me in. I want to get on the bus too. I want to go higher too. And so what ends up happening is everybody starts to pile on down here because we haven't seen a deep pullback. And that's kind of the psychology of it. And in my experience, I always go and I look at the base of that channel. Right? Find the base of that channel. In other words, where the channel runs into the spike, right? The base of that channel, mark that low there. Okay, the first pullback basically, and that creates your buy zone. And that's typically where you're going to find the best entries for a nice deep pullback. Again, think about the mindset of the market with a spike in channel. It's all great going higher, but eventually buyers go, come on, give me something I can really get excited about. Give me a deep pullback here. Give me a 60%, 65% pullback here. Give me something I can really sink my teeth into here and get a big paycheck on. That's what's waiting for right now on this spike in channel. So you can see that spike in channel right there, right? You can see it. There's my spike up. There's kind of the first pullback, right? So that creates the buy zone there. That creates the base of the channel there. Bingo. Now, that's why I said earlier, we've got two chart patterns here, a range and a spike in channel that basically put a big bullseye right in the same spot. So that's definitely where I'm looking for. And if I hit it my way tomorrow, if they ask me, what pattern do you want here, Joe? I would say, give me a nice deep pullback, not too deep, right? But give me, put some meat on the bone for crying out loud. Let's see if we can get some bears to come in and get short off the moving average. And let's try to go in and we'll buy into those stop losses, right? Because once those bears get short, right? Once I see those bears come in and they get short off the EMA, where's stops, right? Stops are right above those highs. And all you got to do now is buy right into those stop losses, All right. These are called failure patterns. In this case, it's great because it gets me in below the range. It gets me in right below the spiking channel. Perfect opportunity. Now, guys, we talk a lot about these failure patterns in our trade room. They're very common. And if you haven't done so yet, if you're not with me in the trade room, you got to learn these failures. I cover a lot more detail on these patterns in our free trading classes. I'll put a link in the upper right-hand corner for you. I'm going to keep on going tonight, right, with the newsletter. Pause the video, though. Grab that free trading class because as part of the free class, you'll learn all about failures and all my other favorite setups, right? All my 4 favorite entry setups in the entire strategy we use in our trade room every morning at the opening bell. So grab that link in the upper right-hand corner, and don't forget, you can grab all the important stuff below this video, the description here on YouTube. All right, we're looking good here. So now you know where to learn more. That little icon up there, that's where to learn more about those failure patterns, which you'll hear me talk a lot about on this video newsletter, and we do trade them together every morning in our trade room. Now, you'll also notice too, I'm marking up this little hidden channel. Right, I've drawn this hidden channel here. Now, is it safe for me to buy the low of this hidden channel? It would be if we didn't have that range. So although I do want to get that nice deep pullback, I do want to get that seller failure and that rally back higher, what if we don't get it? Right? What if we just pull back here and the market tries to go higher from there? What's the safest way for me to buy without getting a deep pullback? Well, how would you describe what are we trying to accomplish? What are we trying to avoid? We're trying to avoid buying high, right? If I buy a shallow pullback, how do I avoid buying high? One of my favorite patterns called a trap pattern. Right? Now, trap patterns are really powerful patterns. Just kind of make sure you wait for them. And this is a great example of where I would gladly look for a trap pattern if we can get the right setup. So again, I've got this kind of hidden channel, we call them, drawn off the highs, off of that low, right? It's a very bullish market here. And if we don't get that deep pullback we're looking for, I call these 2-try trap patterns off of that low. Traps are also covered in that free trading course that I mentioned linked up in the upper right-hand corner. All right. And then what if we really drop, right? What if it really rocks going lower, right? Like this one. What if it does that again? Right? What if we wake up and the market really tumbles? Now what do we do? Right? It goes through the buy zone we talked about earlier. Right? It's a lot deeper now. It's a lot stronger, right? Really strong move. Now what do we do? If it really runs lower, right? If it really runs lower, now look for that classic combination of a 1-try, 2-try, right? So basically, strong move down, what does that do? It puts a lot of momentum behind the bears. Okay, now let them try twice. Once, twice. Once those bears now try twice now we know where they're, right? Now we know everybody's in. And now we know their stops. Now we know their pain begins right above that high. And that's exactly where you want to buy going back up into that trading range. So we talk about this a lot, right? Shallow pullbacks. I'm looking for traps off that channel low, right? Relatively deep pullbacks. I'm looking for seller failure patterns off the moving average, below the range, deep pullbacks. I still want to buy, right? But I want to look for 1-try for the bears, 2-try for the bears. If I can, I love to find a little trend line off of that, right? And buy off of that trend line. Now, one nice part about this is a lot of times this will rip, right? And really run higher. A lot of times these deep pullbacks will lead into a 1, 2, 3 reversal into that new hidden channel, and you can buy the low of that channel as a follow-up once it rolls over. You can see something similar to this, right? As we come lower, right, into that 1, 2, 3, mark up that high, mark up that low, right? And they're buying that first test. That's the same idea as we go higher here tomorrow. So don't forget about that, right? Don't just sit and watch it go higher without, don't sit there and watch it in amazement. Track it, watch that new channel, and we can buy that pullback from there. Now, of course, I do want to stay out of the middle of this range, right? If we do start going sideways here overnight, I do want to stay out of that middle. What are some breakout patterns? Right? What are some breakout patterns? Breakout patterns, there are 2 of them, right? 2 breakout patterns you want to consider here. Remember, it's a range. It's not just a bull spike in channel. It's a range. So I got to be very careful buying high up here. What are two breakout patterns? What are they? One of them is called a 1, 2, 3 breakout, right? One of them was a 1, 2, 3 breakout. That'd be a new higher high, a pullback to the moving average, and a strong jump off the moving average. Very important. I'm going to mark up that high. I'm going to mark up that low, find that hidden channel, and I will get aggressive to buy off of that low, right? The first test is the best test. Again, you can see a very good example back here, right? 1, 2, 3, mark up that high, mark up that low, and buy that low. First test is the best test. Strong move up, shallow pullback, higher high, right? Sorry, higher high, shallow pullback, blast, and then find that new channel. And we're buying off the low of that channel. Second breakout pattern requires a very strong move. Okay, remember a 1, 2, 3 breakout pattern does not require a strong move first, right? All I need here for a breakout pattern is a higher high. It can be a very shallow pullback, and if they hold and blow, right? If they really jump off the moving average, it's great. Mark up the high, mark up the low, find that new channel, and we're in. Right? Again, targets are pendulum swing, all-time highs for sure. If we see this thing really rip, right? If it really races higher here, then I start looking for a trap entry, a two-try trap or a two-try breakout pattern, as I call it. Right? What happens is we'll see a strong move up, a shallow pullback, a higher high, and a trap low. This has quickly become one of my favorite entry patterns in our trade room. These strong moves up, shallow pullback, trap high. And what's really happening is you've got this sense of FOMO going on. That strong move up, that shallow pullback will not allow a lot of the big lot buyers to get in, right? They're going to wait for that trap low and hit it once we get that trap low. The only thing we haven't talked about here today is a sell setup. Right? Buy setups are pretty straightforward, right? We got two breakout patterns, a couple different ways we can trade the pullbacks here right now. What would a reversal look like? Well, take this move back here as a really good example. A strong move down does not guarantee a reversal right now, especially in a world of FOMO, stimulus driven, right? It's a very interesting world we're living in right now. You know, these big sharp moves lower are not guarantees of a reversal. So if I get that sharp move lower, what is actually proof of a reversal? It's not pulling back to the moving average, because again, if that fails, we'll be there to buy right into that failure, right? You know the plan now. But if they can hold that pullback and run, if they can give me a jump off the moving average, where again, they couldn't do it there, right? They whiffed. They pulled it back and whiffed on it, right? This one, if they can hold that pullback and run, okay, now I've got a 1, 2, 3 reversal, 1, 2, 3 breakout. That momentum will be so strong that this first test of the high of that channel, you know, and really, it's almost no matter where it is. It's almost location independent. Whenever we get these 1, 2, 3 reversals, the momentum just starts to whip so much, and people just don't want to miss out on it. The first pullback to the top of that channel is a great spot, right, to get short. Now, where do we think those bears are trying to go? The bears are probably trying to get back down to that low there at 22, right? That low at 22, 33.10. Buyers are obvious, right? Buyers want that pendulum swing. Buyers want that all-time high. All right, we're looking good. So again, don't forget to grab the free trading course. If you haven't done so already, pause the video, grab that free trading class. That way you can learn all about these entry setups. And as a bonus, I'll send you a bunch of examples of how we apply those setups to our favorite futures markets, because that way when you come back tomorrow night on tomorrow night's video newsletter, you'll know exactly what these patterns all look like with that free trading class. All right, we are looking good. How about some oil? So S&P's all set to go here. Don't forget, if you have any questions, right, drop those questions in the comment section. Oil, as I mentioned earlier, is really in a beautiful. It's a great looking pattern here on the oil. It's pretty clear. I think it's pretty clear here as a bull spike in range. It's basically just a big bull run up, Right. And I would imagine a lot of this is because we're seeing the virus numbers come down. We heard from New Jersey this afternoon here saying they're under 1% rolling average right now. Florida looked pretty good as well. So numbers are starting to come around here right now. I'm sure that has a lot to do with it. But I mean, let's face it though. The pending kind of the scent, right, of that, right, kind of the scent of that airlines, bailout or airlines rescue plan is definitely what's probably propping this thing up here right now. We're hearing some rumors about getting that sometime here this week. So we definitely know that's definitely on our radar. So oil, what happened today? Strong move up, right? Strong move up, but that lower high is killing us. Right, that lower high is killing us. And when you look at it in terms of lower high, right, higher low, higher low, higher low, well, it's a triangle, right? Lower highs, higher lows, flattening moving average. It's a triangle. Now, triangles are really some of the easiest chart patterns to trade because they tell you exactly where to buy, where to sell, and where to do nothing. First of all, whenever you see a triangle, you know right away the edges are the most important spots. Right? The edges, not just the edges below, the edges above as well. Now, this is a bullish market into a triangle. So, what is a triangle? A triangle is a range. Let's make sure we know that, right? What is a range? A range is a balanced market, right? Think of this area kind of as a magnet, right? This whole area here will be a magnet for price, specifically at 42.06 area right in the middle. And I don't want to trade in that area. Right? I'm going to trade in that area. It's just like we had in the S&P, right? Where it's basically a bull market into a range, right? And whatever goes down will probably come right back up. Whatever goes up, well, because we're bullish and because we got some stimulus going on this week or potential stimulus this week here, right? It may not come back down, right? That's kind of the one variable here about a bull market is, again, what goes up can keep going higher. We'll definitely look for those two breakout patterns that I mentioned earlier, but really what you want to do is get underneath this range, right? And these two areas are definitely where I've got my eyes on here for tomorrow. Now, we talked about on the S&P, whenever I have a range, what's the most important pattern? Failures, right? Breakout failures. Basically, we want to wait for that move to go lower, wait for those breakout traders to commit, right, and buy into those stop losses. But here's the reality. That first pullback is very, very shallow, right? This pullback right here to 41.80, this is pretty shallow, right? It's not the deepest of pullbacks. What I'd really like to get is down to this area, right? Down to that 41.58. It's a bull market. It's into a range. I'd like to use this range as a magnet, right? As a magnet. I'd like to, if they ask my opinion, I'd like to get us to get down underneath this range. Get that moving average coming up. Get those bears to come in, try to get short off the EMA. Once they do, we know exactly where their pain points are. We know exactly where their stops are. And now what I can do is I can buy into those stop losses. And then don't forget too, I can also grab the buy on the other side for that combination. That failure into pullback combination. Now remember too, once we get that pullback, I can also now measure the amount underneath that range and I can project it on the other side and that becomes a big target, right? So target back to the high and leave the runner target up around, as I'm drawing it out right now, up around that pendulum swing, 42.60 or so, right? So that's what we're thinking for tomorrow. Get that deep pullback down, get those bears to get short, right, and take the bait ultimately, buy into those stop losses, and of course, buy that pullback before we get too close into that no trade zone. Now, every once in a while, the market will really punch. It'll really punch as it goes, and it may not pull back all the way until you get a little trap. So trap patterns are always great when? Traps are great when you're trying to what? You're trying to avoid buying too high, right? So if it really runs back towards that no trade zone, keep your eyes open on that little two-try trap pattern. So failure into trap, failure into pullback on the way back up into that trading range. Now, as you can imagine, if we see a shallow pullback, just like we talked about on the S&P, what's the best entry pattern for me to buy a shallow pullback but still protect myself? Traps, right? Let those bears try once, let them try twice, look for that trap low. And why do I have to have a trap low in this example? Because you got to remember, where's the range? The range is really going to be right about there, right? So if I'm buying just a little bit underneath that range, what's the problem? There's not a lot of open space above me. There's not a lot of reward for the risk I'd have to take. So I have to make sure I get in long as low as I possibly can, right? Those are two patterns I'm watching for here. One for a relatively modest pullback, the other for a much more shallow pullback. And then, of course, as we try to go higher here, where do we think the next levels are? 42.65 is a major top overhead. And then you got that 43.52, which looks to be so much further than 43.52, right? Isn't it? Right? That's 40.65. It looks like that should be like 80, you know what I mean? But it's not. It's 43.52 up there. So I would imagine that 42.65 is the first objective. If it can break through that, 43.52 is the next level from there. What do those breakout patterns look like? Well, remember, you got to worry about this, right? Careful about this because you don't want to buy into that high here. Remember, the edges of a triangle are really, really important, right? The edges of those triangles are really, really important. So if the market jumps and pulls back and then can hold that pullback and run, bingo. What's that called? 1, 2, 3 breakout. Now, I don't want to hear about some strong move because you can see 1, 2, no. 1, 2, no. They failed twice already, guys. Right? They failed twice already. So they've really got to hold this sucker, right? They've got to hold it. They've got to go up, give me that higher high, hold that pullback, and jump. Once I get that 1, 2, 3 breakout pattern, I know it's tough. I know we don't want to have to wait for it to go, but your only other option is you start just flying blind and hoping they hold. That's definitely not my style, right? I want a more proven strategy, and I would assume you probably do as well if you're watching this video right now, 30 minutes right into this video. So it's got to hold this 1, 2, 3 moves. Got to hold it. Show me proof. Show me proof you want this. Then I can mark up that high. I can mark up that low. And now I can get excited. Now I can get aggressive and buy that first pullback. What's the other breakout pattern? The other breakout pattern is that 2-try breakout, that strong move up. Remember, this is the one that requires that strong move, right? The first one doesn't require a big, juicy move. It just requires it to jump off the moving average once it does pull back. This little 2-try breakout, now what we're going to do is it starts off with a strong move higher. We see a shallow pullback, a higher high in price, and then we go in for right, that trap low. That might be the best entry we get, right? Strong jump up, 2-try trap, and of course buying from there. 2 breakout patterns I trust most as we break out here going higher. Again, I'm going to stay away from the middle. I'm looking for that trap on a shallow pullback. I'm looking for that seller failure into pullback combination with that pendulum swing, right? Amen to that, right? Or how do we trade? How do we sell this market right now? Right? What's the best way to sell this thing? Well, the hardest part is going to be, really the hardest part right now is we're bullish. So really the most reliable kind of bulletproof way to sell short would be a breakout, right? 1, 2, 3 breakout. Strong move down first. 2, pull back to the moving average. 3, jump off the moving average. Okay, now we're in business. Where's the target? Oh yeah, back to those lows. Absolutely. Where's my entry going to be? Mark up those 2 new lows. Find that hidden channel high, and then get aggressive, right? And sell off the top of that hidden channel. Okay, now remember, right? You're not going to want to do this right here, right? We're not trying to sell that first pullback. Okay, if you do that, you're trading what you think, not what you see. Right? I have this conversation with new traders all the time. Stop letting your imagination run wild. Trade what you see. What do you see right now? It's a bull market into a trading range. Yes, it may end up down there. And yes, a big strong move is going to be the first piece of the puzzle. But if they can't hold that pullback and go, what's going to happen is they're going to try, they're going to fail, and professionals like us are going to buy right into those stop losses because that range will continue to act as a magnet. So 1, 2, 3, 1, 2, 3 reversal. Now, I will say, if we do go sideways here for a bit tomorrow, if we can really start to see that trading range, I would be open-minded to what I call a crown reversal pattern. If we do start seeing that trading range go sideways, I would definitely be open to that crown reversal, which looks like this. It requires a breakout higher, a shallow pullback that fails to retest the high, a lower low, and a trap high above it, right? That's going to be your crown reversal. It's basically a breakout where the buyers try once, the buyers try twice at a lower price, followed by that trap high, right? That is what I call a crown reversal with that trap high. Now remember, this is only after we're going sideways for a while here tomorrow morning. And don't forget, there's a lot of nuance of these reversals, and we'll talk a lot more about this stuff tomorrow morning in our trade room. So make sure you come out and join us. Again, I'll put all the membership links for you guys in the description of that YouTube video. All right, looking good. So oil, we got you covered. We know the plan for the oil. How about some gold? And again, hopefully by now, if you have any questions, you can drop those questions in the comments section below. I hope at this point now I've earned a thumbs up or a subscribe to our YouTube channel here. We publish this newsletter every evening, Monday through Thursday. Now, what do we see here on the gold right now? It is a bear market into a range. We saw a big pop higher, and they're trying, the keyword trying, to finish off rotation back down to retest those lows. If I zoom out a little bit further, you can definitely see there's a hell of a lot of bears before this trading range. So this is kind of the opposite of what we just saw on the oil and the S&P. And it's kind of a breath of fresh air to see the markets kind of back to quote-unquote relatively normal again, where the equities go up and the gold goes down. For a while there, I was beginning to think we were trading some foreign markets here, right, where everything goes up, right? So the reality is we're kind of back to that normal correlation now, where what's good for the markets is bad as well. Let's not jump ahead here. Right now appears to be holding up here just well. So bears are bearish. Gold is bearish right now into a trading range. Now you can take a lot of the pieces we've already shared so far and kind of put this together, right? So of course we had a bear market into a range. What do you do in a bear market range? You sell above the range at levels of resistance, right? Like triangles, like our sell zones up above the high. How do you sell them? You sell them with, well, in this case, with a strong move up like this, right? You sell it with a nested failure. You wait for one, you wait for two, and you sell it back down from there. That's how I would look at that failure. Now, what do? You mark up that pendulum swing, and we look for rotation down to the other side of that trading range. So that's why I have this little note here for failed rotation, because we really should, at the very least, we should be getting down at least this 2024 area, right? Sellers are really going to be trying to retest that big low from Friday. They did get their low today, right? They took out that low from today, but make no mistake about it, when you've got this much momentum that comes crashing back down, there's a big bullseye right on that 2024 area for those sellers. And what that kind of reminds me here is, if the market takes off to the upside, what does that tell us? It's a very big failure, a failure to rotate, a failure to complete the retest. It's a huge, huge clue going forward. So that's the first thing I notice when I see this chart. It's a bear market into a trading range. We see that big move up, right? We see that failure come back down in, and so far they haven't got that job done yet. That might be one of the biggest clues that we have here on this chart, which really means everything depends on rotation. Everything depends on rotation. So for example, if we make a run higher, well, first of all, what does the range tell me to do? Buy low, sell high, right? Ranges tell me to buy low. They tell me to sell high. They tell me to avoid the middle, right? We know it's a bear market. A lot of bears in the market right now on the gold. So what do we want to do? I want to sell high, right? Now, what do you think? Can I look for your straight up buyer failure pattern if I fail to retest these lows? No, it's not going to be a very reliable setup, right? If we fail to retest that low, I'm going to have to wait for another nested. So one of the setups I'm watching here for tomorrow is going to be a move higher, right? And move higher here and another nested failure, right? Buyers try once, buyers try twice, and then sell back down and again. The reason why I'm looking for a nested failure, which is basically a failure inside of a failure, that's why I call it a nested failure. Once I have those buyers trying twice now, that will satisfy my concern about that failed rotation. Right? It's basically what I'm trying to do. I'm worried that the market will fail and run higher. What I would honestly love to see here is I'd love to see this thing go up, pull back, and really blast off that moving average 1, 2, 3 reversal, right? And then grab that high, grab that low, and buy that pullback. Right? That would be a very nice setup. Obviously, we're a ways away from that. We've got to get above the high of that channel or the high of the range. We've got to pull back to the moving average, and the buyers have to really show us they want this. If they can show us that proof with that 1, 2, 3 move, I'll mark up that high, mark up that low. We can buy the low of that new hidden channel. Right? That's a big, big deal about this failed rotation. So what if we don't fail rotation? Right? What if the market continues here and we run lower? What are my options right now? Can I sell down here? No way, right? I can't sell down here. Can I buy down here? I can buy, I can, but I'm bearish. And what's the best way to buy below a bear range? One of those nested patterns. I know we're talking a lot about those right now. Let the bears try once. Let them try twice. Keep your eyes open for that trend line we always talk about, right? And let her rip, right? Once you know where those stop losses are, you know that range is going to be a what? A magnet. The problem is we're very bearish. So wait for those sellers to try once, try twice, and we're buying into those stop losses right as we go higher. So again, a couple really nice buy setups, a 1, 2, 3 reversal off of failed rotation, right? Another one would be completing rotation and then a 1, 2, right? A nested and buying back up from there. I like those patterns a lot. Now, as far as being a seller on this, let's say, for example, we go back into the range here and we sit for a while, right? If I can see a couple hours of going sideways here, I'll start to ease off the concern about momentum, right? If we sit and go sideways for a while, that will do a lot to kind of satisfy my concern about that failed rotation. So if we do go sideways here, and this will be a little bit how the market feels tomorrow, we'll look for that buyer failure, right? Get above the highs there, get those buyers to try, and we can sell into those stop losses. So as long as we can, get some momentum to chill out a little bit inside that range, I think we should be able to get some buyer failures above that high. But as far as rotating higher here and trying to sell that, no way. No way. It's way too much. Sorry about that. It's way too much momentum. If it runs higher here, the only way I can sell this is with 1, with 2, and then sell back down from there, just because that momentum will be too strong. But if we sit inside the range for a while, right, now we kind of mellow out a little bit. Now I can, right, now momentum's not as bad now. Now I can wait for that pop. I can wait for the buyers to try. That tells me where stops are, and I can sell, right, that move back down in. Or if the buyers hold it, 1, 2, 3, goodbye. Mark that, right, mark that new high, find that new channel, right, and we're buying off that as well. Again, failed rotation is a huge clue if it does not retest those lows. Now, if we do go lower here, we have a lot of open space below us, but it all looks like that big round number at 2,000, right? Doesn't it? Yep, it looks like that big round number at 2,000. There's a range underneath there at 1990. So if we can get breaking out lower here, I have no problem selling short as we go lower, but you know me, right? I'm going to want to see a 1 strong move down, finish off the job first, then show me that you mean business. Right? Show me that 1, 2, 3. So finish off the job first, okay? Finish the work in front of you, then show me you can hold that pullback and go. Then if you can hold the pullback, great, breakout pattern. Mark the low, mark the high, big bullseye now. Off, right? Big bullseye back to that 2,000 round number. And maybe we get lucky and we can use that trend line as a key level of resistance. right? But again, if we just run lower here, I'm still thinking buy. 1, 2, back up in. Just because you're at the support line, right? You're below the range. I can't get too aggressive, but I can definitely look to be a buyer to buy low and sell high in a range-bound market. The big nuance for tomorrow is that failed rotation, right? Failed rotation and how that means, what that means for momentum. That will determine the best entry patterns we'll go for on gold tomorrow. And this is why it's so important that you come out and do it with me, especially if you're a new trader. There's a lot of nuance in ranges and how the market rotates back and forth. We will, of course, do it together tomorrow and every morning, Monday through Friday. I'll put all of the membership links, all the registration information. I'll put all those big buttons for you guys. The description of this YouTube video, I'll also put a big blue button for you below this video tonight on the trading blog. So make sure you get registered either for the free trading classes or as a brand new member so we can do it together tomorrow morning in our trade room. And as always, don't be afraid to call me in the office tonight. If you have any questions, do not be afraid to call the office. I would love to answer all your questions, help you get registered, and that way we can get ready right for tomorrow together, or use that live support tool. I'm always there standing by to chat back and forth. I've been more than happy to answer all your questions there as well. Whatever you do, though, don't be a stranger, right? Whether it's phone or email or chat, whatever it is, I'm always here to help. If you have any questions, speaking of questions, make sure you drop those questions in the comment section below. Hit that thumbs up button for me, and don't forget to come back and see us again next time. Tomorrow morning, 8 o'clock Eastern time. We'll see you guys there. If not, we'll do it again tomorrow night for the next edition of this nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.